How are we doing, everyone? So in this video I'm going to be breaking down 3 things that we can use to add confidence, add confluence and increase the probabilities on the trades that we are taking. Welcome back, everyone. If you're new to the channel, welcome. Like I said in the beginning of the video, I'm going to be showing you 3 things that I personally use to help find trades and to help find confluences within this trade idea and to simply increase probabilities of the trades we are taking, okay? So I'm going to be breaking it down in 2 examples. We're going to be taking a look at the 4-hour example on Euro Australian dollar and then the 1-hour example on Pound New Zealand dollar, okay? Just before I start, the reason why I'm breaking it down on 2 time frames is just to show you guys that structure really is structure no matter what the time frame. And what I mean by that is simply whether price is making higher highs and higher lows on a 5 minutes or making higher highs and higher lows on a daily time frame, the structure is still telling us that the trend is pushing up, okay? So structure is structure no matter what the time frame. This can be applied for any of you guys either trading the weekly, daily, 4-hour down to the 15-5, any time frame, because structure is structure no matter what the time frame. So let's take a look at the first example, Euro Australian dollar, okay? The first thing I want to be looking for is key levels, right? Take a look at this chart, take a look at this example, and can you identify where this key level is, okay? We can see that price has been rejecting off this level around here, okay? We can see that people have been placing buy orders at this key level, right? Because as soon as price gets down to this area, price has been pushing up here and been pushing up here, okay? So we can identify this as our key level. The first thing we want to be doing is just looking for key levels to where we can look for price to be pulling back to, right? Key levels are just psychological levels in the market where traders are placing their orders, okay? So clearly here, look, price came down, traders placed buy orders. Price came down again, they placed buy orders. But this time, price actually broke and then pushed down, right? But this is still a key level because look here, look at this 4-hour candle, how it's pushing down and closing below the key level. This is a strong momentum shift. This is still telling us that there is traders at this key level setting sell orders. Instead of setting buy orders, they're just setting sell orders, okay? So a key level, we just want to be identifying them by seeing where price is pushing from them areas. The next thing is going to be trends. Where is the market trending, okay? So we can clearly see here, right, that price has pushed down. So look at it in a child's perspective. Look at it as a 10-year-old's perspective. Where's the market going? It's clearly pushing down. So we want to be looking for sales. Again, this is going to be something that's going to increase the probabilities because if price is pushing down, we want to be looking for sell positions, okay? And this again is going to increase probability. So let's just go over it quickly. We're looking for key levels and we're then looking for trends. The next thing we want to be doing is we want to be identifying structure, okay? When we're trading the downtrend, we always want to be entering at the lower high, okay? So what we want to do is using our key levels that we've got marked here and then identifying that the market's pushing down, the trend is down. We then want to look for price to pull back and find our structure. So that's the third thing, structure, okay? So let's take a look at the example. Wait for price to pull back to this key level, as price will always come back to key levels, okay? Like I said, they're just areas in the market where traders are placing orders, okay? So now price has pulled back. We've got our key level where price has pulled back to. We know the trend is down. So the last thing is, like I said, is looking for structure. We see here that this is a lower low and this is now our lower high. And by using the 3 concepts I'm telling you about, we are able to find a trade. We've got a key level break, we've got the trend pushing down, and we've got a lower high being made at the key level. So these are confidence that we can just simply use to add to our trading method or add to our trading plan and to give confidence and confluences when trading or taking trades, right? So we can now take this trade. We know the market's pushing down. We know we're entering at a lower high, which we need to be entering at when market's pushing down. And we know we've broken the key level, but we've now returned to the key level. Trading from key levels will always increase probabilities because this is where you can place your stops above. And if price does want to break back through, this will invalidate the trade and that means you were just simply wrong. So we can place our stop above structure. I'm going to go for 1 to 2, which is just part of my trading plan. And we can take this trade using the 3 concepts I'm talking about. We've got key levels, we've got the trend pushing down, and we've got structure. We're entering at the lower high. So let's just see how this trade plays out, okay? We had all these 3 confluences to look for the trade, and it's increasing our probabilities. And there you go, we take profit. So let's take a look at this second example on the 1 hour time frame on lovely pound New Zealand dollar. So what do we need to look for? Okay, we need to look for key levels, we need to look for the trending market, and we need to look for structure being made. Okay, and when price is pushing up, we need to make sure we're always entering on a higher low. And in that previous example, when price is pushing down, the structure we want to be entering on is lower highs. Okay, so where's our key level? That's the first thing we want to be looking for. We can see that we've got a key level around here. Okay, and why can we identify this? Because simply we've got wick rejections here, price respecting it. This is where traders have set sell orders, so there's clearly traders at this level. Price has then broken it, come back, retested it, and price is then pushed off from it. Okay, so we've got our key level. The next thing is then identifying the trend. Okay, so you always want to be making sure we trade with the trend to increase our probabilities. We can clearly see the trend is pushing up. Okay, like I said in the previous example, look at it from a child's perspective. Where's the price simply going to? Okay, and it's clearly going up, so the market is trending up. The next thing we want to look for is structure. We need to be looking for we need to look to enter on the higher lows when pushing up. So what we can do is we can use the key level, wait for price to pull back to the key level, because we know this is where the traders are sitting at. And once we've got price pulling back, this would then be our structure being made, which is the third point, entering at the higher low on an uptrend. So waiting for price to pull back, we see price pulling back to this key level. We then see price creating wick rejections, indicating that price is failing to break any lower. And what we can do is we can simply wait for one candle to start pushing in the trend direction and look for an entry. Okay, so for this example, what have we done? We found key levels, we found the trend where the market is trending or where the market is heading, and we have found our structure points to enter on. Okay, we've got a key level here, wick rejections, price broke, came back, touched it again, came back again. We then have the trend that is pushing up, and we then have now a higher low as part of the structure. Okay, so now we can simply enter the trade using the three confluences I'm talking about and going for your take profit levels. Again, trade the take profit levels how your trading plan tells you to trade, but these are just three things that I use to help add confluence and confidence and increase the probabilities when taking trades. So using these three confluences, let's see how this trade plays out. And as you can see, look at that, absolutely beautiful, we smashed take profit. So what can we take from this? We know that we can use these three concepts to add confidence and confluences to our trades. And these three concepts being looking for key levels, okay? Identify where the traders are sitting and waiting for the price to pull back to these key levels. We want to identify the overall trend of the market we're trading or the recent price action that we are looking at, okay? Look at it from a child's perspective. Where does it look like the price is going? And lastly, it is structure. Looking to enter at the higher lows if it's an uptrend, or looking to enter at the lower highs if it's a downtrend. Hope this has helped you guys out. I hope it's brought value to you lot. Like I said, these are some three concepts that I personally use to help add confluence and confidence to my trading, to increase the probabilities, which we all want. We want to be having a profitable strategy. By adding these three things, you can 100% add confidence and use these as confluences to take your trades. If you guys enjoyed this one, I appreciate you leave a thumbs up. Thank you everyone for watching. I appreciate every single one of you. I'll see all you guys in the next one.